Good Friday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the pre-market show with this man, Dmitry Pargamonik. How you doing, D?
Good morning, Will. How are you?
Great. Just a reminder, on Tuesday at 2, we have our webinar with Interactive Broker, our monthly webinar. So
Yep.
Everyone, I'll put that in the chat on YouTube. Morning, D. How you doing?
Yep. Tuesday, it's going to be on option volume profile. So we did one on stock volume profile, and that turned out to be, I think, a pretty good webinar. We had a lot of people, big turnout. We had some good questions. So let's do one on the option volume profile, and that will be on Tuesday at 2 o'clock with Interactive Brokers.
Any guess what number webinar this is on Interactive Broker?
I think we've been doing it over a year with them, right? So I would say over 12.
I think it's 17.
17.
I think this
wow.
is the 17th. And all those webinars are available on the Interactive Broker website. They're not on our YouTube channel. I'll actually, just for giggles, I'll put that on the chat as well. So anyone who wants to link over, it's got the whole library of the webinars. Anyways, here we go.
Awesome.
You want to start with the disclaimer?
Yep. Before we get started, everyone, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your RIA, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's a disclaimer. And let's get started. I'm going to share my screen here. And anyone joining us for the first time today, the reason we do these shows in the morning is really to answer any questions you may have on Market Chameleon tools, data analytics, strategies you might want to discuss, maybe something unusual you've seen and you want to bring it up to the community. Couple ways to ask the question is to put it in the live chat on YouTube. Will's watching it and he'll read them back to me. If you want to come on the show live and ask your question, we also provide a link to Zoom. If you click on that link, that takes you over to Zoom. Once you're inside Zoom, there's a button, raise your hand. Click on that. You don't have to turn on your video camera, but once we let you in, everybody could hear you and you could ask your question direct. In the meantime, we give some time for people to come in and ask those questions. We'll start out looking at the pre-market report. I'll take a look at any questions, maybe from previous day that we had, or some stuff that come over the email. I'll default to those, and maybe we'll take a look at a couple different reports on Market Chameleon to get some insights into the markets and how to use some of the tools. Okay, so we'll start out with the pre-market report, and then we'll take questions as they come in. Sound good, Will?
Perfect.
All right. So pre-market report, these are stocks trading at pre-market hours. We have our most active stocks, biggest percentage gainers, biggest percentage decliners. Coming down here, 61 stocks made our percentage gainers list, 66 on the decliners. So pretty even from that perspective. What we can do now is narrow down this list to stocks that are only in the S&P 500. This way we want to take out any small cap stocks, ETFs, leverage products, closed-end funds. We'll clear those out because that makes this list a little bit noisy, and see what's going on in stocks that are in the S&P 500. Let me just refresh my screen. I think that we did have some numbers come out on employment this morning. Is that correct, Will?
Yeah.
So these numbers have changed. I refreshed it. So it looks like we're a little bit more bullish bias at the open. So I had this up for a while. But let's take a look at SPY. So to filter out this list, you could use the filters here above. They control the list below. This filter in ETF, when you drop it down, you see different ETFs listed there. When you select one of these ETFs, the report below will get filtered by stocks that are holdings in that ETF. Okay. SPY, the first one, that's the S&P 500 ETF. When you select that, this list below gets filtered by stocks. There are the holdings in SPY, which are the S&P 500 constituents. And here we see 21 stocks made our percentage gainers list, 7 on the decliners. Again, from this perspective, right now, we look like we're lining up for a little bit more bullish bias at the open. And we got some mixed numbers, right? I think today's numbers look like the unemployment came down a little bit. There was more hiring than expected market, which is good for employment and the economy. But on the other side of the equation, the Fed is trying to slow down inflation, or really, bring inflation back down to 0 to 2%. And we're at like close, depending on which inflation numbers you look at, between 8 and 6%. If you're looking at the CPI or PPE or whatever you're looking at, it's still too high. And right now, the Fed looks at the employment picture, and that is considered inflationary pressures, right? So we're at very low unemployment, more jobs available than there are people to fill them, and they want to bring that back into balance so they could get inflation back down to their target 2%. So depending how you look at it, it is good. It's good maybe for the economy that there are plenty of jobs out there, but it might be bad from the inflation, battling inflation perspective. Let's go to, do you have any questions yet, Will?
4D asked earlier about and if he wants to come on and ask specifics about it, he can certainly. He was asking, I was meaning to mention this for a while, but it would be great if MC could add the break-even number to its option P&L diagrams. I don't know if there is a spot where there is a break-even number, or if it's something we can ask, but that's what 4D Drover was asking earlier.
Right. I'll use SPY as an example. I always default to SPY. I think what he's talking about, I'm going to go to the options chain because he was talking about options. And you can run a diagram on different strategies. You can create a custom strategy. So right here I'm an SPY, I'm on the options chain. And here you could select different expirations. And now I'm right here, I'm on January 13th expiration. And if you do a very simple strategy, like say buy a call. So I go to the 381 call, this side is calls, this side is puts. So if I go to the 381 call and I click it, on the ask side, it creates like a buy leg, all right, like a buy ticket. So you can see here, buy January 13th, 381 call for $5.18. And you could change these parameters after you bring it up, right? So I could change this to a sell, change the expiration, the ratio, even the price. All of these I could change. But let's stick with this. If you run a diagram on a simple leg, you just hit calculate. And this will bring you up using the options profit calculator, this will default to a diagram of your profit and losses at expiration at different stock prices that it could close at. So you could see here, right, the 381 call, you're paying $5.18. That's your premium. So the stock has to go up by enough to cover that premium. So your break even is like right here, right? Inside the diagram. So you can visually approximate like where's your break even, or you hover over it. Okay. So that's kind of like a way to do it, because visually you kind of see where the stock has to go by expiration. I think maybe his question was like to give the exact like maybe point in here. Is that what the question was? Like give me the break even point
Well,
right here.
we are a little delayed. 4D, is that the exact question?
Yeah. But visually,
he was just asking. So he said, thanks. So right there, I'm assuming while you're hovering over it, if it gave the exact number is what he's
right.
at.
So the reason, right. So, right. It only spits it out in the diagrams, doesn't give a list of a bunch of numbers. And depending how complicated your strategy is, you could have multiple break evens, or the break evens are changing once you start changing some of these assumptions around, and then it's approximations. And I'll give you an example of what I mean. If I just change this a little bit, right, then I bought a straddle. So now I bought a call and a put. Now I have multiple break evens, right? One to the upside, one to the downside. And if I keep adding legs, I could have different break evens at different prices depending on how customized and structured I am. Now, I'm just showing you a strategy that is common, right? Because this is just a straddle, or a call spread is common, an iron condor, butterfly, but this doesn't limit you to that. So you could create as many, as complicated as you want. Maybe I want to, sell 2 of these, or 3 of these, then, but I want to stop myself out with 4 of these. And, as you get complicated, then it becomes, harder. You get more break evens, and sometimes if you're going cross expirations, it even gets more complicated. So these are still, and here we could kind of, you could kind of get to an exact point, right, when you hover over, but you could see here how many, I have like 1, 2, 3, 4, something like 4 break evens, but here break even is, you break even goes up a little bit, then comes back down, break even. So it's easier to see kind of on a graph, and hover over, and you're going to get the approximate number right there. Here it'll become a little bit harder because you have to have an assumption. So if we have January, for example, January 381, then I come out here, and I go to March, and let's say I sell something in March. And then I have to run a diagram. Well, here the break evens, we have a break even, but you have 2 separate expirations. And when we do a time spread like this, and I'm showing you a simple one, right? A simple one, meaning that there's only 2 legs in this one, 1-to-1. And in a time spread, your break even is an approximation, because on January 13th, well, we could run a profit calculator at January 13th for this option, because we know it's either going to be worthless or it's going to be in the money, and the option will be worth whatever it, parity is to in the money, whatever its intrinsic value will be at expiration. So that one will be easy, right, to calculate at January 13th expiration, because it has no more time value. The March one will, on January 13th, will not be so easy, because that option will not expire yet, right? On January 13th, this option here will still have DTE, days to expiration. And because of that, it's going to have a certain implied volatility with a certain premium in it. And we don't know what that, we don't know what that implied volatility will be. We have to make an educated guess, and we could move it around, and that will change this as well. So, so again, if I change these, oops, what did I just do? If I change my assumptions, let me go back and put this in there. Let's say I change my assumptions and say on January 13th, implied volatility will be lower. Let's say 19. If I rerun this, this graph is going to look different. You see? So, and then what if I change another parameter and say, I don't want to wait till January 13th expiration. What about if on January 10th? So now I have a different graph here to compare to. One on January 10th, one on January 13th. So that's why graphically it's easier to show because you have a lot of stuff going on here. So you'd want to kind of see it. And if you hover over it, you'll get that, it's hard to, I agree, it's hard to exactly hover over but you're going to be like right there, within pennies. But this is why, because this option profit calculator has a lot of parameters that you could start changing around. Okay. And because you have all that and you're using assumptions, we show it graphically instead of like spitting out numbers. Right. Because then we'd have to spit out a bunch of different numbers and it'll be harder to figure it out through just the numbers alone. The graph really kind of shows you better visual of what's going on.
All right, that was helpful. Thanks, Dee.
Yep. So let me see if there are no follow-up questions on this one. What I'm going to do is let's look at, well, I'm trying to think. I think I had a question come in the morning. I'm trying to remember what the question was to answer, but I can't recall.
Was it in your emails?
It was in an email. I read it this morning again, but it wasn't this morning's email, so I don't want to go back and search for it right now.
Gotcha.
So let's move on. I think it had to do with comparing volatilities. Okay. So I'm going to go here under options, volatility compare this tool. And I forget how the question was worded exactly, but it was like, if I'm looking at a group of stocks, how do I compare their implied volatilities? So I don't, something along those lines. So we'll take a look at this report. If the person's listening, maybe they'll follow up on the question. And what this report is doing here is looking at a group of stocks. So over here, I have this group of stocks defaulted to the Dow Jones. Now you could drop it down, and the top ones are, we just defaulted to a couple different popular ETFs that you could select from. So when you select, let's say, financials, reloaded, it'll load the group of financials. And you can see there's a lot of them in here. But let's go back to the Dow Jones. And if you create a watch list, you could bring up your watch list. So let's go back to the Dow Jones. And we're looking at a group of stocks in the Dow Jones. And here you see Intel, I think that's Boeing, Apple, Microsoft, Disney. These are the Dow 30 stocks. And what we're looking at is on two axes. The one axis, it's showing where the 30-day implied volatility is. So you could see here, Intel's 30-day implied volatility is 45.9. So all the way up here, very high. Boeing, 41.6. Apple implied volatility, 39.8. So that will match up with this axis. On the bottom here, this shows where the implied volatility was the previous day. So see this, where this line is, that if it's right on the line, it's saying that the implied volatility from the previous day is exactly, today's implied volatility is exactly what it is from the previous day. Okay. If it's below, like this WBA, that means today's implied volatility, right, is below the previous day. So here on WBA, you see the 30-day IV. Yesterday was 35. Now it's 28.3. That means on the day it is down. Now we're looking at yesterday's data because the market's not open. So this is end of day yesterday. And really quickly, you get a visual what's going on the day. Which stocks in my group is the implied volatility moving higher? Which stocks is the implied volatility moving lower? And by how much? And I could see here now, just visually, I see a lot more greens. So yesterday, I would say in the Dow Jones, the majority of the stocks, the implied volatility was higher on the day, right? That's what all these greens are telling me. The reds are telling me some of them declined. And I see that the one that declined the most was WBA yesterday, went from 35 to 28.3. Okay. And the one that climbed the most, I don't know, visually, that one might be a little bit harder to tell, maybe like the Sierra. So the one that climbed the most would be the furthest away from that line. Okay. So that line is your benchmark line to show you how the most recent implied volatility compares to the benchmark line. So that's the baseline right here, benchmark. So let's change this. What if our question is not, now that we know how the implied volatility did on the day, right? Well, before we do that, what else do we see here? We also see the stock with the highest implied volatility in the Dow Jones, which is Intel right now, right? Intel is implied volatility is 47.3. And that is way away from the rest of the group, right? Because look at the next one, Boeing 41, Apple 39. So that one in our group is way away from the group, Intel, right? That one kind of like sits out there and is like, why isn't it, clustered closer to the rest of the group? And you could see here, this middle part will be the, the middle cluster, and these are at the bottom. And the one that's really the lowest, KO and J&J. So Johnson & Johnson is on the other end of the extreme. That implied volatility is 18.2, which is up on a day, but it is way, lower than here, the middle part of 30, let's say. Right. So that's the other thing that's kind of sticking out, is where the one, the ones extreme to the upside and downside, and maybe they deserve to be there, but this visually lets us know, well, here's Johnson & Johnson, and maybe there's similar stocks to Johnson & Johnson somewhere here. And I would say, like, here you got a couple here at the bottom clustering before, I think this is Walmart, Coca-Cola, J&J, but Intel kind of is out there by itself. So what the next question would be, maybe, well, is this usually where Intel is? Is that normal for Intel to be at 45? It is way out there. By today's standards, it's way out there from the rest of the group. But is that normal? And is it normal for J&J to always be like this? Does this picture, like from day to day, look the same? So let's drop this benchmark down and say, show me the implied volatility. Change this to the implied volatility 52-week average. Where's the implied volatility on average for Intel, J&J, and all these? and how far away are we from the average. So let's reload that. And now we have a different picture, and we see that Intel, right? It's usually not up here. It's usually down over here at 36. So it's above its average, right? 47.3, 36. On the high end, you usually see Boeing, right? Boeing, CRM. So this is the 52-week average, and you can see they're all below. And on the low end, you do see J&J, so it's usually out there. Okay, so that's KO, McDonald's. So they're usually on the low end, right? So the Intel probably sticks out because you usually see it closer to here. Apple also above its, above its 52-week average implied volatility. It's a different way to look at an IV ranking, you could say, because we're looking at the average, how far away it is from the average, and how does that compare to the rest of the stocks? Because maybe it is high, but if everything else is high, then that's just implying that the market, right, that the market implied volatility is very high. But if we want to see, is it high and if the rest of them are not high, the implied volatility is high, then maybe something is going on in that particular stock. And, Intel, Apple kind of stick out right now because they look to me like they're above, way above the average. Verizon's kind of above the average here. IBM, 3M company, they're way above the average. Nike fell a little bit below. But our next question could be, all right, we're seeing this is above the average. Apple's above the average. Intel's above the average, IBM. If we're interested in the stocks that are really high, our next question might be, well, how high is this relative to how high it's been in the last 52 weeks, right? It looks like implied volatility is up there, right? It's really up there. Intel, it's really up there. But how far away from the 52-week high, right? How far away is Intel from its 52? Is 47 the 52-week high, or is the 52-week high, 80? That might make a difference. Let's change that baseline again. I'm going to go over here and say, show me the implied volatility, the 52-week high. So this line here is going to shift to the 52-week high, and we're going to see for each symbol how far away it is. How far away it is from its 52-week high implied vol. All right. Let's reload it. And now we see, they should all probably be below or right at the line. And now we see that Apple is the closest, it looks like to me, to its 52-week high. It's not that far. Apple looks like the 52-week high is 44. It's at 40 right now. Intel, it's getting there, 47, 52-week high, 59.7. But, Nike's probably way away right now. That one looks like it's the furthest from its 52-week high. Cisco's kind of way away. I mean, Boeing, CRM, even though they're you could see Boeing and CRM, usually they're higher implied vol, but right now they're much further away from their 52-week high. So we're right up at 930, but again, I don't remember exactly the question. It did have to do with comparing implied volatilities, and I wanted to kind of go to this report and just show some use cases here. If there's a follow-up question, well, let me know.
Awesome, D. Great job. Awesome report. Thanks so much. You answered all the questions today, as always. Have a great weekend, my friend.
All right, everyone. Thanks for joining. Stay safe out there. Have a great trading day, and hope to see you guys on Monday.
Trade and peace, community.